Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news that eyes will be on New Zealand's GDP data today. But first, it's all about the US Federal Reserve. Janet Yellen has made no changes to any settings today, but the real signals have come from the statement and the tone of a press conference. These will shape expectations of what it'll do next. The Fed sees economic activity expanding at a moderate pace despite the global economic and financial developments of recent months, and an inflation pickup domestically. There was even one Fed member who wanted them to raise their policy rate this meeting, but they've stayed with the program of only gradual increases of the federal funds rate. Immediately following the release, Wall Street shifted from negative territory to positive territory. Separate Fed data shows that February industrial production and factory capacity utilisation both came in slightly lower than expected and lower than January. But building permit data, also out earlier today, shows a strong 6.3% rise over the same month a year ago, and housing starts are up more than 30% on the same basis. Her review came after data released that shows underlying American inflation increased more than expected in February to 2.3% as rents and medical costs maintain their upward trend. Petrol prices kept the headline rate low. Those have almost flowed through the American economy now, and in future will be much less of a restrainer on overall price inflation. The Fed may soon be facing inflation well within its target bands and pushing higher. China has announced that electricity consumption rose 4% in February, which, given the pace of improvement in energy intensity these days, is probably a good indicator that their 6.5% growth goal is on track for 2016. They have heady growth in generation from wind and nuclear and significant declines in generation from coal. And in the UK, the government there has unveiled a surprise new tax on sugar. The share price of sugar drink manufacturers has taken a dive. Locally, eyes will be on our GDP growth data for the December quarter. Markets are expecting a real growth of 2.1% compared with 2.3% in the September quarter. We'll have the actual results here at 10:45 this morning. In New York, the benchmark US Treasury 10-year yield inched higher at midday today after the Fed announcement to 1.98%, falling back only marginally after the Fed statement. The oil price bounced back a little today and is now at $38 a barrel in the US, while Brent is just on $40 a barrel. Lower than expected US stocks seem to have caused the reassessment. And those inventories are lower because consumption is rising more than expected in the US. The gold price has slipped a little and is now at $1,229 an ounce. And the New Zealand dollar has jumped following the Fed statement. Interestingly, we've jumped against all comers and not just against the US. The New Zealand dollar starts today at 66.8 US cents, 89 Aussie cents and 59.8 euro cents. The TWI is just on 70.6, an impressive 100-point gain. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.